Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Queen Ying Goodnight TV on January 14th, Wednesday. I'm Huang Pingru. The phone equipment should be working properly. Today, we're going to discuss a few topics. Right now, there are a lot of different news stories interacting in the stock market. But looking at the market right now, we see that the make sector is leading in this or that direction. In the past few years, or really for most of the time, technology has been the main sector. So if tech still can't hold up or show an upward trend, then the Dow Jones will. As for bank stocks, we're seeing a mixed performance. Some are doing well, some are just okay, and some aren't doing so great. Against this backdrop, the stock index might be a bit sluggish going forward, or it might not show a clear upward trend. In addition, we'll be discussing a few topics such as some positive news for Coinbase. Also, is it time for the drone sector to take a break? And finally, we'll talk about an opportunity with Ready. So for this week, actually the most important data was the December Consumer Price Index on January 10th, which was already released yesterday. Today, the October Producer Price Index and retail sales, as well as December's morning fog sales will be announced, but these data points are relatively less important. So it's fine to just take a quick look at them. Today, we're just sharing the PPI with everyone. The expected PPI is 2.7, and you can actually see that overall, if the data doesn't differ too much from expectations, there shouldn't be any major issues. As for the MA, the expected value is 0, so with a forecast of 0.2, it still looks okay. Another thing is, if you want to go short, there still isn't a clear downward range yet. Currently, the US dollar index is relatively weak, so right now the situation is, there's still uncertainty, and this Fed struggle isn't over yet. As for interest rates, it looks like they'll continue to fluctuate within a range. It seems there won't be any major changes before the FOMC meeting, unless there's a decision about whether to cut rates or not, and any follow-up arrangements. Only then might there be a clearer direction. Otherwise, before that, it's more likely that nothing much will change, and we'll just see some minor fluctuations within a range. The 10-year yield is in pretty much the same situation, so you can see that right now there really isn't much change in interest rates. At the moment, there is no obvious catalyst to change this trajectory or path, and the 3-year yield is in about the same situation. So overall, there aren't any major events happening with interest rates, and you can see that. As for the financial sector, actually yesterday all the major indexes showed relatively lackluster performance, and right now it seems relatively weak. So let's see in the next few days whether bank stocks or perhaps the upcoming earnings reports on the 8th can provide a boost. Confidence. Since most of the tech companies' earnings will only be announced at the end of January, there's still about 2 weeks to go until then. So in these 2 weeks, there might not be any major short-term moves. A catalyst that would allow the stock market index to show a clear upward movement. If things are going to move quickly, the earliest we might see a significant change would probably be at the end of January. As for the Dow, it experienced a relative drop yesterday. So looking at the current situation, we need to see whether the Dow Jones and its component stocks can continue to hold steady. If they can, there's a chance they could lead the index upward. But if not, and tech stocks remain weak, then the market over the next few days, or even the next week or two, will likely stay pretty flat. As for the Nasdaq, it still seems to be in a relatively weak range. The Philadelphia Semiconductor Index, SOX, shows a rather obvious upper shadow on its candlestick, which means overall, it's still mainly the equipment and self-sufficient sectors that have enough capital driving them. As for the others, some individual stocks, like Intel and others, actually haven't performed much at all. As for the Russell, it did dip a bit yesterday, but we need to watch and see whether this decline is going to continue or if it's just temporary. Now, looking at investment news, Reuters is saying that even though we're seeing ongoing unrest in Iran and a lot of people are discussing whether the Iranian regime might be overthrown, which we also mentioned on Monday as a possibility, well, will this actually come true? According to Reuters, for now, Iran, as a theocratic state, still has its theocratic leadership firmly in control of the country. Unless there is internal division, meaning unless the clergy, the military, or the security forces themselves split from within, as long as they don't turn on each other or have conflicting goals, it's relatively hard for outside forces to change Iran's political structure and the community of shared interests. That's basically the current situation. However, Trump is still adding fuel to the fire by urging the Iranian people to continue protesting. So this situation might just be... I also wrote that I might take some sort of action, but this topic is actually a pretty bad example because if you want to do something, but you don't really have the ability, and yet you keep making noise at the door, then it's basically like, it's actually quite difficult to really do it. And everyone probably knows that what you're trying to do is hard and it's relatively tough to achieve, but you still feel like you have to go for it. This kind of topic just creates more confusion, including the fact that it could end up affecting the relationship between the US and China. At the end of last year, this relatively mild relationship was damaged, which led to fundamental uncertainty. This is possible. So now the result is even more confusion and uncertainty. And this is the current situation. In fact, all the news right now is pointing to more chaos. They're uncertain, and we'll take a look at each of these as we go. Next, the Danish foreign minister and the head of foreign affairs for the Green Party will be in the US for talks today. They will meet with the vice president and secretary of state at the White House. Previously, the Prime Minister of Greenland mentioned that if they had to choose, they would choose Denmark. As for Denmark, it was also mentioned that the country has already sent more troops and military equipment to the north and south. So at the moment, it's actually about Greenland, or the EU or NATO, and indeed it was Trump who dismissed this idea. This idea can be considered, but actually the United States already signed a military agreement with Denmark back in 1951. According to this agreement, the US is allowed to deploy troops as needed. So actually, the US currently has troops stationed in the north and south, or conduct certain operations, which do not violate the current agreement and are also permitted by Denmark. So it's still... people might not really understand why Trump was so determined to bring Greenland under US control. It could be for more reasons than just military ones. Maybe it also includes mining or other resources. So what he wanted seemed to be complete control over Greenland, not just being satisfied with the current situation. He wanted to deploy military equipment, or have even more comprehensive control, without needing the consent, knowledge, or cooperation of any other country. This situation has been ongoing, and as for Trump, he actually posted on Truth Social within the past hour, where he mentioned, Greenland is very important to the United States for this missile defense system project. He also believes that NATO should comply and go along with the US in acquiring Greenland. On this topic, Trump has made his intentions and objectives very clear, so we'll just have to see how this issue gets resolved moving forward. In addition, regarding this, the dispute within the current administration, Dr. Peng analyzed that. What this means is that the intention is being forced onto Powell, but this time it might fail. It could end in defeat. However, in the long run, the intention to control the fees should succeed, because right now, Lee Seymour has already expressed full support for Trump, saying, I'm on his side. They also believe that another board member, Boom, might switch to Trump as well. So, if Powell, this time, after the central bank chairman steps down, even if he doesn't serve another term as chairman, he will still remain on the board. At the latest, he would have to step down from the board in January 2028. After he steps down, Trump can appoint someone else. If, in addition to appointing one person, he can appoint another, then before taking office in 2029, he could appoint 4 people in total. Now, the Federal Reserve Board only has 7 members altogether, so with 4 people, that would be a majority and give him more than half the influence. So he could potentially make a profound change to the culture of the Fed. So really, it just seems like a matter of time. Right now, because there's someone who will be stepping down soon, he'll be leaving in May. He said he'll also keep the position of board member open, so actually this is just a matter of time. It seems like what he wants is just to smoothly transition this matter during his term. As for what happens after, he probably won't have the strength to do much about it. So that's the situation we're seeing, and going forward, there's a high probability that Trump will have the chance to take control of the Fed and change it. As for the consequences, we'll just have to see how things develop. So what impact will this have in the short term? Well, sometimes he might actually be more likely to keep this position as a governor, because usually people step down from the board. But if he were to step down now, everyone would say it's due to bad luck or political concerns. So maybe to calm those worries or to put those rumors to rest. Sometimes the likelihood of him staying on might actually increase, also considering the need to maintain the Fed's reputation and independence. In addition, the FOMC will probably be even more cautious in its upcoming decisions about rate cuts or any overall interest rate policies. Because besides having to prove their economic logic and arguments to the public, they also need to show that they are independent and not influenced by any outside pressure or interference. This issue actually makes them even more cautious and careful when making decisions. So this is actually a situation that might not be so good for the economy. Originally, you might have been able to make decisions more quickly, more efficiently, or more directly, but now everything has become more complicated. Another thing is that it might become a bit harder for Trump's successor to get confirmed, because originally, Trump already had an outstanding candidate in mind. But after this incident, people from all walks of life have come out to oppose what Trump did, including some people who might have been his own candidates. Even some of the potential candidates have hinted that this whole thing isn't really a good idea. So what happens next? No matter which party the new chair comes from, it's going to be tough. They'll also have to prove themselves. That's a real challenge, and it's actually pretty difficult to pull off. We'll have to wait and see. So far, all the outcomes have been negative, and this is actually a pretty big blow to the overall American system. We actually mentioned this on Monday as well. Alright, so what trends or phenomena can we see in the market right now? Metals have been rising sharply lately, and it seems like there's no turning back. This upward movement is really obvious. The pace is extremely fast, and it feels like everyone's expectations are high, but prices keep going higher and higher, and it feels like they can keep rising. So what does this trend mean? It means that right now, lately, people are seeking safe havens in the market and showing a lack of trust in the system. So overall, why are metals rising? It's because metals themselves are inherently valuable, and there's real demand for them. When we don't have much confidence in the system or the credit structure, people tend to shift toward metals as the safe harbor. That's the current situation. So right now, the stock market doesn't seem to be dropping much, right? Many important stocks are just moving sideways. They're not really falling. But if money is flowing into metals, it shows that the overall sentiment isn't that optimistic. There's this kind of confused and uncertain feeling, and the stock market doesn't really have any momentum to move up either. Right now, the big tech stocks are performing pretty weakly. Because large cap stocks have a high weighting in the index, it's relatively difficult for the index to move up at the moment. But if the index can go up, it would also mean that other stocks are helping to drive the market upward. So the breadth and structure would be healthier if that's the case. But if that's not the case, it basically means that overall, Huiru, what we mentioned at the very beginning is that large tech stocks are under pressure, the stock index is under pressure, and a lot of money is still in metals. So actually, people are feeling pretty anxious and directionless. But on the other hand, I've noticed that cryptocurrencies have recently shown a rather obvious inflow of funds. One is, if you don't look at this sector, Bitcoin has now surpassed 95,000 and is holding steady at this level. So we're watching to see whether Bitcoin can keep moving upward. If it does keep rising, it's possible that some of the money from metals is shifting over here, waiting for opportunities in Bitcoin during this period of uncertainty. Another factor is that there are elections this year. Before the elections, we usually expect a lot of stimulus measures, like increased welfare or tax cuts for businesses, and efforts to lower the cost of living. These could potentially boost the stock market, but on the other hand, policies might also create a lot of confusion and uncertainty, leaving people unsure of what to do. So we might also see some selling and people taking a wait-and-see approach. So there are really two sides to this. The current government, the current US administration, actually has very chaotic policies and lacks continuity. As we've mentioned before, continuity is important, mainly because it provides predictability. If there's no predictability, then no matter how business-friendly or market-friendly you try to be, it doesn't help because people don't know what you're going to do. That makes everyone worried, anxious, and wanting to play it safe. So that's the current situation. Now, with this policy chaos, it's already very obvious in the financial sector. Trump wants to lower credit card interest rates, mortgage rates, and basically all interest rates. He keeps pushing for rate cuts. So from what we can see now, the structure of the financial sector, some of their spokespeople, like the CEO of JP Morgan, have also mentioned this. Lowering credit card rates is expected to have some negative effects, and so on. So right now, this indirect impact on the financial sector is already very obvious. As for the policy risks, there still isn't a clear management approach or method, so all we can do is wait and see. Take corresponding actions, or maybe just observe for now. So this is something we need to consider. When choosing this, it's a broad issue, and there could be opportunities for significant gains, but at the same time, people might become more anxious and cautious. Right, so at the moment, precious metals are still on an upward trend. According to Bloomberg's statistics, that's the case. Citing some sources, he mentioned that in election years, the average pullback can reach up to 18%. That is, during this period. During this year, there could be significant, a possibility of a market correction. So, what about in more specific situations? For example, if both chambers are controlled by the same party, but there's a chance they might lose, like the current situation, where both the House and Senate are controlled by one party, but it's possible that party could lose at least one chamber, what happens then? In that case, the average market gain for the year is only 3.8%, which is quite low. So what does this mean? As for the tariff bill, we actually don't know if it will be announced today. If it is, I'll explain it to everyone tomorrow, but as of now, it still hasn't been released. So regarding the past few years during the midterms, everyone has been selling stocks and waiting to see what happens. Some people say, well, you could invest in international markets, or you could just take a longer-term view to ride out the volatility. Basically, it depends a bit on your perspective, or you might consider investing elsewhere. That's kind of the feeling right now. There are still a lot of different opinions about the current situation. As we mentioned in the title at the beginning, right now there are many different factors interacting and affecting the market. So we're keeping a close eye on the major sovereigns and the mainstream companies. At the moment, if they haven't made any clear moves yet, then it's relatively difficult for the stock index to show any obvious upward momentum in the near term. All right, next we'll talk about some news related to the second headline. So what about Coinbase? It seems likely that they can avoid the worst case scenario. There's a good chance. As for the Senate bill, originally, it actually stated that if it's a stable coin, it would be completely prohibited from paying out dividends or interest. Now, the current situation is that if you use stable coins, not just simply hold them, or if you participate in certain membership promotions, then it's allowed. This is also a way to provide a workaround for institutions like Coinbase. As for Coinbase, their response is that they are currently complying with the simplified regulations. My initial assessment is positive. So where does this optimism come from? It's because at present, there are two main types of institutions in the financial sector. One is traditional banks, which have their own banking operations, and the other is the tokenized securities market. Stablecoins, in fact, serve as a bridge between the virtual financial world and the real physical financial system. Because stablecoins are pegged one-to-one with fiat currency, it's basically like if you hold stablecoins in the virtual world, it's similar to holding fiat currency. If you can redeem them on my side, it means you're holding virtual currency in this world, but holding RMB in the real world. It's just like holding money in real life, since you would earn corresponding interest. That's why banks are very much opposed to this. Stablecoins pay interest, which means that money might move from the physical world into this virtual world. Since I can earn interest with stablecoins, and I can also earn interest with regular deposits, it doesn't seem all that different. So in the future, there might be more and more uses for stablecoins. In that case, I might as well put more money or more resources into this. E-commerce will exist in the virtual world, so I might not even need to interact with the physical world. This is the tug of war between both sides. If bank deposits decrease significantly, all of the bank's businesses will be affected, especially the bank's core capital, which comes from these deposits. They use those deposits for many different applications and so on. So this is the current situation. Next, we also see that Bitcoin has strengthened. As I mentioned earlier, this situation could mean that some capital is being shifted over here, with some funds staying in this area. Additionally, with ongoing geopolitical turmoil, Bitcoin's influence is also increasing. In situations where a country might undergo changes by the government, or when certain systems are shifting, Bitcoin offers relative convenience and privacy. It's easy to transfer, and there are hardly any friction or transaction costs. So right now, the strengthening of Bitcoin could also be due to the current situation being relatively chaotic. A bit of warmth in this context. Alright, as for Coinbase, its stock price has actually been weak for quite a while, but recently its performance has been relatively better. Right now, it's up a bit in pre-market trading, so we'll keep an eye on how Coinbase performs going forward. If our ecosystem here continues to mature, Coinbase actually holds a pretty significant position and influence within this ecosystem, so its stock should continue to be a good investment target in the future. Next, number 6 is the drone company Rick, which announced an impressive performance. Actually, the press release is just these 2 sentences, nothing more. The official release will be made once they formally announce it, because these are unaudited figures. They're just giving you a preliminary look. The data shows that for Q4 2025, the reckoning was expected to be between $24 million and $26.5 million. That's about an 1,800% increase over 4 years, which is quite significant for such a new company. For the full year of 2025, the revenue is expected to be between $38 million and $41 million, which would be a year-over-year increase of about 153%. The company's CEO emphasized that this year they will carry out more major projects. Basically, there were some projects already scheduled, and this year they're going to execute them. The revenue growth rate will outpace the growth in costs, so that's the situation. Everyone is happy to see this situation, and what people don't want to see is when your revenue grows really fast, but your costs also rise quickly, making it hard to turn a profit. So when revenue grows faster than costs, it means profitability is just around the corner. The company also emphasized its leadership in the 14th generation drone system. Redk is mainly focused on military applications, with its core business being military related. Its main clients are government and defense agencies. However, when it comes to the stock price, there have actually been some interesting changes. Redk made its announcement yesterday, and the stock price reacted to this news. You can see that the stock price was quite volatile, with frequent long upper and lower wicks, but in the end, it closed higher. Still, the increase was relatively limited. You can see that during this period, the lower shadow was quite long. In the days before these daily long upper and lower wicks, there were several days with very long upper wicks. This indicates that sellers are still relatively strong at the moment, so even though they announced such good results. The market's view on its stock price is actually a tug-of-war between bulls and bears, with many people selling and many others buying on dips. In this situation, it seems like the drone sector might take a break for a while. Similarly, for its peer ONDS and Andus, you can see that in the past few days as well. It has experienced quite a bit of selling pressure, so this is what we are observing first. When we discussed this internally, we thought it might be the original shareholders selling their shares. But right now, there is a lot of selling pressure at these high levels, which means that people are probably cooling off on this sector for the time being. Funds might shift to other areas, since it already had a sharp rally starting from the end of last year. It's likely that the sector will take a bit of a breather in the near term. And then there's UMAC, Unusual Machine, which is in a similar situation. A few days ago, there were long upper wicks, and as for yesterday, the selling pressure was evident. That one is ABABK. It also started to surge around the end of December, and after that sharp rally, it now seems to be taking a break as well. As for KTOS, it's also in a similar position. It's relatively high, and a doji has appeared, so there may be signals of a downward move coming up. Next, let's take a look at opportunities with Ready. As for Ready, this company, the overall fundamentals of the company are solid, and its most recently released financial figures, the period's numbers in quarterly store data are from the third quarter of last year. The revenue growth rate at that time was 68%, which is higher than the cost growth rate of 28%, so its profits increased correspondingly and quite rapidly. In Q3, the net profit was $1.61, which represents a year-over-year growth of 160 to 440%. Its active users, both daily and monthly, also saw double-digit growth. And as of last October, it was also ranked among the top 3 websites in the US by visit volume, so Reddit's current financials and profitability are both very strong. Looking ahead, Reddit also has a very clear growth blueprint. Its strategy is to focus on app-centered growth, aiming to get more consumers and users to engage with its platform. They want to make the platform a kind of wardrobe and then encourage more direct participation or higher frequency engagement, and in turn, increase their retention rate. In addition, Reddit is also diversifying its sources of traffic. Currently, in most cases, Reddit still relies on Google for traffic, but in the future, it may shift to paid acquisition or develop its own channels. Or they might organically grow their own traffic, or have KOLs or publishers help drive it. Another goal is to expand global communities, which is part of their internationalization strategy. Lastly, they want to broaden their advertising formats, introducing many different types of ads. This year, they also plan to scale up interactive ads, which is another key initiative for them. This will become another source of increased revenue. So, as you can see, overall, Reddit has shown pretty good financial performance, and going forward, it looks like they have a clear growth plan, which should help them maintain momentum in both revenue and financials. Their operations are also expected to improve significantly, and overall, things are looking quite positive at the moment. As for the financial side, the company has achieved the financial targets it set for itself and continues to improve. Initially, its adjusted EBITDA margin was set at 10%, but now it has already reached that goal. For example, the gross margin is at 50%. In the medium term, they aim to maintain it at that level. Additionally, management also wants to maintain revenue growth that outpaces the growth of costs, and this rate is twice as fast, so this is basically what they're aiming for. This allows their profits to continue to grow. In addition, the incremental profit margin refers to how much of the new revenue translates into profit. Currently, this is out 60%, and in the long term, they hope to keep it above 50%. Overall, these financial targets have not only been met, but have also improved. As for the company's stock price, it's actually not far from its previous high, and it only went public in 2024. You can see that right now it's around 200, roughly in this range. So you can take a look. It's already quite close to its previous high here. So overall, from a technical perspective, from a technical standpoint, there's really nothing unusual about it. There's also no situation where a large number of people are stuck at high positions. So for now, it's just a matter of waiting. So if it manages to break through its previous high, since it's not far from it, once it does, there could be another opportunity for a new upward trend. The company will only announce its financial results on February 11th. So before that date, everyone has more time to look into some of the company's basic details and do some research. Planning and strategy updates as well. So that's our introduction to this. You can take a look to see if this company presents a corresponding opportunity. On the other hand, we also need to talk about the main risks associated with this company. Secondly, the company is still very dependent on Google for traffic. So if Google changes its policies, or if one day their partnership experiences some unexpected changes, the company would be significantly impacted. As for number 802, the Reddit platform still relies heavily on its own moderators to maintain order, but this company is really cold, meaning if there's any mismanagement, it could lead to a worse user experience. There have been incidents in the past where moderators staged large-scale walkouts. This has resulted in various platform issues and so on. So this is something that actually requires the company to invest effort and resources into management. Next, regarding Reddit, most of its viewership still comes from advertising, so its revenue sources are very concentrated. If there are any disruptions or major hits to its advertising business, the company's profitability would be strongly affected. In the long run, they hope to expand more financial sources through their own ecosystem, to have more ways to make money instead of relying solely on advertising. This could mean getting more consumers to pay for other services or features, but at present this hasn't materialized yet, and it's still quite far off. So in the foreseeable future, there's still a high chance that advertising will remain their main source of revenue. And finally, there's the open environment and the large language model. As for the open environment, it's still relatively lacking in moderation or data controls, so a lot of people can say whatever is on their minds. This often leads to more spontaneous, inappropriate, or even hostile content. So this is an issue that companies also need to manage. But if you don't handle moderation well, or if there are disputes, it can affect users and shape how everyone perceives the platform. And finally, regarding large foundational models, if they are not properly unified, or if you use ready-made resources, it could also harm the company's interests. This is relatively hard to prevent, so it needs to be constantly monitored. Lastly, there's also the company's founder, this Hubman. He actually controls the company, including 70% of the shares, so if anything happens, or if someone within the team disagrees with him, it's actually relatively hard to manage. And actually, if things are friendly, because the founder doesn't necessarily, and usually the founder will, hold the majority of the shares, so this is in the startup or growth stage of a company, this situation is more common. If the company is more mature, then this kind of situation is less frequent, but it doesn't necessarily mean it's a bad thing. This isn't necessarily a disadvantage, it's just a phenomenon. But that's the current situation. Now, let's take a look at the pre-market strength section. So currently in the US pre-market, most tech stocks in the S&P are trending downward before the market opens. This is something we mentioned at the beginning. And also tonight, I want to talk to everyone about this. If tech stocks continue to show a downward trend, moving away from their previous highs, it means that this trend is becoming even more obvious right now. It's relatively difficult for the overall sentiment to improve. As for the stocks that are rising, the main one is actually Honeywell. The company it supports is planning an IPO. Also, let's take a look at whether there are any upgrades in ratings for those defense stocks. Netflix has dropped a lot, and currently the tech stock supported by the US government is Intel. And then later on, Newman is a startup stock in the industrial sector, and both mining and industrial stocks have been really strong groups recently. You can see that startup and industrial stocks, these are the main ones. And as for Coinbase, as I just mentioned, it's also up in pre-market trading right now. All right, now let's take a look at the next section. As for the declines, actually quite a few of the large tech stocks I just mentioned have dropped. So right now, the overall sentiment is still relatively not that great. Let's take a look at the overall situation. Here, you can see the market capitalization of the US market, which is a lot of stocks that surged significantly in volume, especially those that went up a lot in pre-market trading, have actually dropped quite a bit. So right now, it seems like some of the capital is flowing back, and we need to see where it's heading. It does look like the major indices in large sectors aren't moving much, but the smaller sectors are seeing more changes. That's the situation here. This is an observation we've made. The same goes for the declines. Let's take a look at the overall trading volume. From what we can see right now in the overall market, if there are stocks that are rising or have high trading volume, it seems like quite a lot of capital is flowing in, but overall participation is still rather limited. It looks like we're seeing a situation where gains and losses are about evenly split. So in this case, the current market atmosphere seems relatively... There are all kinds of mixed news, and there's no clear direction. All right, that's all for today. Good night, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.